Hi. Let's learn about inheritance tax. Today, we will talk about what inheritance tax is, how it's calculated, and who pays it. An inheritance tax is a tax paid by the recipients of inherited assets in some states. It is different from an estate tax, which is paid by the estate of the deceased. An inheritance tax is not the same as an estate tax, and there is no federal inheritance tax in the U.S. Only 6 states collect inheritance taxes, and whether it applies depends on various factors such as the value of the inheritance and the beneficiary's relationship to the deceased. Inheritance tax is only applied to the portion of an inheritance that exceeds an exemption amount. Rates usually start in the single digits and rise to between 15% and 18%, and the closer your relationship to the deceased, the higher the exemption and lower the rate. An inheritance tax applies to bequests above a certain amount, and there are exemptions for heirs based on their relationship to the deceased. Inheritance taxes and estate taxes are 2 distinct forms of taxation. Estates pay estate taxes, while inheritance taxes are paid by the beneficiaries. In some cases, an inheritance could be subject to both taxes. One common strategy to minimize inheritance tax exposure is to purchase a life insurance policy and make the desired beneficiary the policyholder. Putting assets in a trust is also an effective way to avoid inheritance tax. The 6 U.S. states with inheritance taxes provide varying exemptions based on the size of the inheritance and the familial relationship of the heir to the deceased. The federal estate tax exemption exempts $12.92 million over a lifetime in 2023, and $13.61 million over a lifetime as of 2024. There is no federal inheritance tax, but a federal estate tax applies to estates larger than $12.92 million in 2023 and larger than $13.61 million in 2024. Whether beneficiaries have to pay taxes on inheritance depends on their familial relationship to the deceased and their location. Only residents in states with inheritance taxes may be subject to them. Inheritance tax rules vary by state, but most states only apply tax to an inheritance above a certain amount and charge a percentage of this sum based on beneficiaries' family relationships to the deceased. Here are 5 key takeaways. 1. Inheritance tax is a levy on assets inherited from a deceased person. 2. An inheritance tax is levied on the value of the inheritance received by the beneficiary, and it is paid by the beneficiary. 3. There is no federal inheritance tax. 4. Inherited assets may be taxed for residents of Iowa, Kentucky, Maryland, Nebraska, New Jersey, and Pennsylvania. 5. Whether you will pay inheritance tax depends on the amount of the inheritance and your relationship to the deceased. Hope this would help. Thanks for watching.